Hello and welcome to Business Today. I'm Siddharth Zarabi and you're watching Market Masters. Today with us, one of the most famous names in the Indian stock market, veteran investor and chairman and co-founder of Motilal Oswal Financial Services, Raamdeo Agrawal. Namaskar, welcome to the show, Raamdeo. I want to begin today by getting your first comments on this massive development that has come as far as derivatives is concerned and the regulators' action against Jane Street reportedly making 36,000 crore rupees worth of trading action as far as derivatives is concerned. How do you see this action?
Actually, Siddharth, I have not seen this thing. I just saw a flash that SEBI, I think, wants to move against this particular entity. So, but I don't know the implication of it and what exactly it involves. So, no, I'm not competent to comment on this.
Fair point. But a lot of retail investors, Mr. Agrawal, are now seeking advice, and maybe this is the time to repeat the lessons as far as derivatives trading is concerned. What would you say generally on the topic to all those retail investors who might be looking forward to some advice from you?
See, in any case, in trading, very few make money, and I'm absolutely zero on trading in the sense that. But then the guys who are masters of it, those who have proficiency in handling a lot of data and they're using a lot of computers, and they have the that what do you call that gut feel of trading, and they've done well. See, what is most important is what has been your experience. If in last 2-3 years of your trading, if you're making money, then who stops you? It is your way of making money in the stock market. If there are billion guys in the market, there are billion ways of making money. This is your way of making money. Continue with that. And with all these actions, of course, there will be some changes in the market movements and things like that. And probably a probability of you making money might go up a little bit.
Absolutely. Let's move on. We are seeing continuing global uncertainty, and amidst this, domestic growth seems to be pretty strong. Given that, where do you think our markets are headed over the medium and long term, Raamdeo?
Yeah, so yes, economy is a little slow. You are seeing in GST numbers also, and of course the regulators have moved. At least the RBI has come much stronger than what anybody's expectation was in terms of the quantum of rate cut as well as the pace of CRO reduction. And also now government's attention is very clearly focused that the slowdown has gone too far and they need to give back energy to the real economy. And but then it takes 4-5 quarters to stop the party, and it takes another 4-5 quarters to bring the party back in action. So I think yes, initiatives have started. I would think that after the monsoon, the busy season starts, and you start with Diwali, Dashara, and Christmas and all. I think that point of time, the difference between last year and now will be felt. Hopefully, all the fiscal and monetary benefits would play, and the consumer demand should perk up. That's the expectation. But as of now, things have. I just come from one of the meetings, and there the managements are saying that it's very, very dull, particularly automotive side, which is a benchmark for a lot of consumer demand, whether it is a two-wheeler, four-wheeler, and trucks and all. So they're not seeing. They are saying that current year would be plus minus 5%, which is not the for a 7% growing economy. The number should be more like 10, 12%, 15%, which is not there. So hopefully it comes back in second half.
Absolutely, a good point there, and we have seen what is happening, for example, on Hyundai, which was for long the second largest automaker in India, massive listing last year, and we have seen that stock see a pressure of some sorts earlier on account of dipping sales. But what kind of index levels are you expecting, Mr. Agrawal, for the Sensex and Nifty by then? You spoke about the Dussehra Diwali season.
See, I wouldn't know next 5 months, 7 months and all, but I've been in the market for the last 45 years, and what I have seen is that every 5 years, 6 years, anybody in 4 to 6 years, market is double. There is no reason to believe that this is not going to repeat. We have enough momentum in the economy, enough corporate profit to improve, and multiples are a little high, okay, but it's not back-breaking. Also, we are going through capital market revolution also. The pace at which demat accounts are happening, the amount of interest people have, and the kind of digital infrastructure we have. So I think a lot of positives are also there. Just the economy needs to get some momentum. So if it doesn't get in September, maybe it'll get in December. Maybe not this year. Maybe next year. So when you buy for 5 years, if you take a 5 year view, there'll be 1.5 years bad and 3.5 years good. It's like a when you drive a car, your car moves between 0 and 120. So average is always 60. So yeah, right now it is the real economy is moving at less than average speed, maybe 30, 40, 50% kilometers. And I think in second half or maybe next year, we might see massive acceleration in the real economy. But markets are very smart. The moment you see the first flush of strengthening of the consumer demand, say in 2 months' time, 3 months' time, markets will start moving up much ahead of that.
Mr. Agrawal, there are some questions that are coming in from viewers. I'll try and take two small topics very quickly with you. One relates to your view as far as Indian equities are concerned, and the question is, are Indian equities running ahead of fundamentals right now?
Uh, Yeah, see, is market cheap? No, markets are not cheap. Markets are very fairly valued. If anything, it is little richly valued, I would say, right now. Across, I mean, I'm talking about broad market, but there are always industries, there are always segments, there are always stocks which are underpriced even in a fairly valued market. And there are stocks which will be overvalued also. I mean, lot more stocks will be overvalued and fewer and lot less stocks will be undervalued. So that's the character of the market. For finding a good company at reasonable price, you need to work a lot more. Earlier it used to be say 5 days you could get a good stock. Maybe now it is almost a month if you work, then you might get one. So that's the kind of situation. It is an extremely liquid market right now, and it's a fun to be in the market. Economy is looking up, and yes, I mean consumer side might be a little weaker, but there are a whole lot of other segments of the market economy which are doing very well. So you have to align your portfolio where the growth frontier of the economy is. So markets are fantastic, little richly valued, but I don't see any kind of a major crisis or anything like that.
Another question, and this says that many companies are still trading at 100 times PE. Do you stay invested at these valuations? That is the question that is being put.
So since I don't buy a lot of direct stocks, I buy my own mutual funds, bulk of them mutual funds, few stocks here and there unlisted. But yeah, I mean, if I bought the stock at very low price, if I bought a 100p company at a very low price, I mean, I bought it at 10p multiple, 5p multiple, and the stock is now 5x, 10x, 20x. I would sit on, knowing fully well the stock is overpriced right now. It will correct, but it has given me excess return in the past. So my excess return will get reduced in next 1 or 2 years, and then again the growth of the earnings will decide. But good thing about India is that all the good companies, they have a lot of growth ahead of it, because the economy itself is going to going to grow at 10-12% nominal for many years to come, decades to come. So there are very few good companies. They might be overpriced right now, but don't become impatient. This is where the patience is required for long-term investing. You have to sit through maybe stagnation in the stock price, or much slower movement in the stock price, or net negative also. But you have to sit through if you have a 10-year, 15-year horizon.
Absolutely, patience is key. Mr. Agrawal, what are the 2-3 themes that you think could be big wealth creators on the next 5-10 years?
Yeah, see, running theme is, I mean, you need to buy a terrific company. If you, I mean, the themes are overstretched, but the companies you buy, because the entrepreneurs are magical guys, they can make money out of nothing. So who are the guys, who are the entrepreneurs? And then you need to have one is a good set of entrepreneurs and reasonably good businesses, say banking, finance, they're reasonable business. They're not outstanding businesses, but but there's a lot of growth out there. So who are the companies where if the industry is growing at 15, 17%, which are the companies which can grow at 20, 25%? So you have to keep looking out for them. And whole lot of new companies are coming up whose story is not fully known. So you'll get a lot of these spots where companies are mispriced even while doing IPO. And you can ride on them. They are brand new management, brand new business model, very little knowledge of it. There's no benchmark for them to be valued. I keep coming across these companies continuously. We don't know how to benchmark these companies, their valuation. So that's where your unique understanding of those companies that will allow you to buy into them for long term. So long term investing also needs very deep long term understanding of the future of the company. And once you are very comfortable with the company for 10, 12 years and you know how it is going to look 10, 20, 15 years henceforth from here, I think that gives you that power to stay on the company and enjoy the power of compounding.
One quick follow up to that point, and I wonder if you have a view on possible listings in the near future, including the National Stock Exchange, for example, or NSDL and Tata Capital, which are in the pipeline. Would you have a view on those?
I would not have any view. I mean, I would have definitely some view personally, but I don't think I'm going to speak on individual stocks on them. And some of them, I mean, like NSE, I know I have a long-term view positioning also. So I'm bullish. So that's one thing. But other companies, I don't know enough to talk about them.
Fair point. But I'll come back to the thematic bit, and this is also related to a question that has just come in, and we are asking you to therefore pick one theme. The view is for too long, perhaps 20 years, because we don't know whether 20 years view can be taken now. But what is your response to that? One theme for the next 2 decades?
Everything to do with the stock market, the capital market, the MIIs, the market infrastructure, market intermediaries. They are the guys who are going to become, this country will produce a capital market in 10, 15 years, which will be unbelievable. You cannot imagine, how much it will scale up. Even I cannot, I don't want to hazard a guess how big the entire theme will be. We are sitting at about 470, 460 lakh crore market cap. It is doubling every 4 years. You imagine in 10 years, you will have almost like a 1,000 lakh crore kind of a marketplace by 2030, 32. In that, the kind of and all the market participants, even broking, asset management, they're very monopolistic, asset light, monopolistic, and they keep growing. So I think that's where I see longer term possible. And this I'm able to say confidently because a lot of these businesses we are doing ourselves. So
Correct.
I see. So I have, I'm staying with these companies for business for 20, 30, 40 years. I have seen the initial stages of them. Like there was no mutual funds in till about 93, 94. And actually mutual funds came into being at the turn of the century after 2003, 4. And actually we got some AUMs by 2007, 8. So it's a very, very young industry. The whole thing is just about what do you call 65, 70 lakh crores. Of that equity is 40 lakh crores. So I mean, in a deposit base of 200 lakh crores, I would think that in next 10 years, the AUM could be as high as 300 to 400 lakh crores. And I think the top 5 players will remain same. So I think the opportunity is very, very, very large. And the guys who are coming from behind, the new energetic entrepreneurs with the AI capabilities and all sorts of digital capability, I think they can actually surprise. Look at Zerodha. I mean, turn of the century and last 10, 15 years, they're the king of the broking market. So now that you'll get players in various other segments who are going to dwarf even the success of Zerodha.
That's a very good point you make, Mr. Agrawal, on AI, and we've just done a story where many global CEOs have, for the first time in the recent past in the United States, said that AI will impact their workforce numbers. And all of them are saying that they will have to reduce workforce numbers because of the impact of AI. Now, that is overseas. What is your own sense from a AI impact on our companies, our stocks?
See, AI will positively impact everybody except for the services companies. Services company has to rediscover themselves, redesign their business model, retrain their entire workforce, and so they will redesign their entire business model also. Without them, the world cannot survive. But the kind of a growth they had without I think there will be some maybe 1 year, 2 year kind of a breathing space when they will re-emerge as a AI powered services companies, and their business model could be different, their revenue model could be different, profits could be different. So I don't see anybody spending less than whatever one is spending in the tech right now. But who will win? Whether the infrastructure providers will win, chip providers will win, or the services guys will win. So you leaving aside that, but in the real businesses, the impact is massive. I'm just coming from the tech exhibition of our own company right now, and they are saying that, sir, we can do all this at. We can do double or triple of the work we are doing today, and with much better what you call access with the same amount of people or lesser number of people. So clearly, headcount freezing will happen in businesses, and the businesses are growing. My sense is tech cost itself might stabilize or might be. I think the value delivered by the same tech cost will be far higher than what it is delivering now. So great time for the businesses.
One very quick follow up on that point. There are three shortages that some companies, and some of them are in the listed space, are facing. One is the rare magnet shortage, the other is battery and related to technology, and third is of course semiconductors, where enough is not being manufactured in India. Do you see that as a short term or a medium term challenge?
I don't take my word, but it could be medium term. I mean, suddenly in 12 months it is not going to get sorted. But I think enough capacities will come in India, abroad, all over. There are a lot of capex happening. I don't have any clue on that, but I mean, no shortage lasts in the world for a very long period. The world is
Okay.
flushed with a lot of capital, a lot of ideas, a lot of entrepreneurs. So I would think that the shortage is not going to be prolonged forever.
Absolutely, and wherever there is a shortage, as we have seen, some jugaad, some solution comes,
Yeah.
and that is Indian entrepreneurship. Mr. Agrawal, one more point before I move on to a broader question, and this is about pre-IPO investing. We have seen quite a
Ah.
buzz on that. Is this a
Hmm.
serious long-term opportunity, or is it just a buzz?
See, you need a lot more expertise to invest in unlisted space, because in unlisted space, the problem is that disclosures are very limited and nobody can hold on to them. Whereas the moment it gets listed, one, it is very quarterly kind of presentations, and SEBI supervises everything. So you are in a very safe territory. It's like a policed area, So there is a township where there is a lot of police and everything is there. There's a lot of orderliness. In pre kind of unlisted space, the police is very scanty, if at all it is there, and hence you have to be a lot more what do you call confident and expert in getting into those unlisted stock. Pre-IPO is still good because pre-IPO is almost what you call listed kind of a space, and they are going to go public in 6 months, 8 months time. So they're all ready, and presentations are there, data flow is there. But pre-IPO, like completely unlisted, small this thing, you need different kind of expertise.
Raamdeo, you've spoken often about quality, growth, longevity, and price. How has that framework evolved in today's fast-moving market?
It's a perpetual framework. If the framework doesn't work in slow market or fast market, or every year it has to change, it's not a framework. It is perpetual framework. I mean, you got to buy 10 rupee thing. See what is market? I mean, you got to buy cheap in the sense that what is worth 100 rupees. The value is 100 rupees. The price is 50 rupees, 60 rupees, 10 rupees. Price can also be, this is a crazy market where 100 rupee thing can be sold for 1,000 and 1,000 rupee thing can be bought for 100.
Yeah.
So, and nobody wants to spend time in trying to understand what is the worth of the company. A pharmacist would love to buy AI company, and the AI guys would like to buy pharmacy company. So you can imagine what is going to happen. So that's the problem of the market, and that gives us opportunity because we stick to the companies where we actually understand. and we spend time with them. Because
Absolutely.
even understanding the company takes time. 2, 3 years, 4 years, successful investing allows you to learn the company like 70, 80%. You'll never understand 100%.
Absolutely, and we are seeing, since you mentioned pharmacy, broader impact of AI on healthcare and even doctors' diagnosis at the initial level basis your initial reports. But I also want to ask you, and this is again a point that has been sent to us, you are being asked and posed this question: is it harder to find value now that there is so much liquidity in the market?
We talked earlier on this that yes, it is a rich market, richly valued market. So you have to work a little harder. You have to have your framework very clear so that you can find those companies. And earlier we used to find, say, you used to find 5 out of 10 companies. You look at 10 companies and you shortlist 5. Now it might be 3, and you have to work a little harder to get that last one company which you want to buy. So definitely it's a more challenging time, but it's very exciting time also. Sector after sector, there are a lot of new sectors like energy transition. It was not there. All the wind companies, solar companies, they were dead 2, 3 years back. Today it is the most throbbing sector. All the capital market companies, all the NSDL, CDSL, your broking company, they were all growing at 10, 12%. Today they're all growing at 25, 30%. So there is a lot of change. So you can't be static in the market. This is a very rapidly changing market. You have to go the growth frontier, and you examine whether you have the guts to go and take a dip into those kind of sectors and those companies, and put your bet.
Before I let you go, Mr. Agrawal, just a quick couple of points, because you spoke about guts and a fast changing market. How does one stay invested when you see quality stocks in your portfolio also correcting very sharply?
Yeah, so see, you have to look at your portfolio return. Don't bother too much about the individual return. If the company is doing well, but the stock price is down, I don't think there is a reason to sell or panic. But see, what happens is that people get too much focused on an individual stock rather than entire portfolio. In diversification of stocks, that's the biggest beauty of the stock market, that you buy 15, 20, 30 stocks portfolio, and you cannot go wrong, because there will be some stocks will be moving up, all 25 stocks will not be moving up, and all 25 will not be moving down. You have to have more movers up and less of moving down. On the whole, when index makes 15%, it's not that all the 50 companies are growing at 15%. There is always, this count. If you look at only positive companies, your return would be 30, 35%. It's just that dragged down by the companies which are not doing well. So you have to have that understanding the way index works. In fact, your portfolio is also nothing but an index.
Absolutely. And jate, just one comment: buy right, sit tight. Does that advice change, or does that continue?
See, buy right, sit tight, in terms of allocation in India, that's the best thing which works. Like you decide, okay, you have 100 crore portfolio, you want to be, you are edged, whatever, 60-40 you want to do, 60% equity, 40% debt, do whatever with the debt, but 60% equity, don't go 58%. Stay invested at 60. That is buy right, I would say. And then buy within that the best possible company at a given point of time. But please don't mess around with the allocation of 60% equity, and then they'll say, sir, I'm 30% in cash because the markets are looking. That is where you get, shafted.
Absolutely. And your words of advice can help prevent that, especially for this younger lot of investors that chases alpha in our markets, something that's very difficult, but you made it quite easy by answering and taking many of our questions, including viewer questions. Raamdeo Agrawal, as always, thank you very much for your time with us today here on Business Today. That's a wrap on this episode of Market Masters, viewers. We'll come back with more Market Masters and Market Gurus. Do always stay tuned in, keep sending us your questions, and we'll try and address them as we go along. Once again, thank you very much, and bye-bye.
If you like the video, do like, comment, share and subscribe.